नो वॉइस ही देयर यार, क्यों? हेलो हेलो।
No, voice is not coming.
वॉइस इज नॉट कमिंग यार। अंकित, जस्ट सी दैट योर लोकेश को बोलो ना, वॉइस नहीं आ रहा। ये रिकॉर्ड ही नहीं किया क्या?
Yes, sir. Let me check. हेलो।
हाँ हाँ, तो आपकी तो आवाज आ रही है।
यस सर, आ रही है। कुछ टेक्निकल इशू की वजह से वीडियो में आवाज़ नहीं आ रही थी, बट आप अभी करोगे तो आवाज़ आएगी उसमें। आप
वी
एक
कैन
बार
स्टार्ट।
अपनी तरफ से।
वीडियो ये
यस,
ओवर,
वी कैन
वीडियो
स्टार्ट।
ओवर,
यस।
आई कैन स्टार्ट।
यस सर, आ रही है। कुछ टेक्निकल इशू की वजह से वीडियो में आवाज़ नहीं आ रही थी, बट आप अभी करोगे तो आवाज़ आएगी उसमें। आप एक बार
स्टार्ट।
अपनी
लेट
तरफ
अस स्टार्ट।
से। यस, वी कैन स्टार्ट।
Good evening, friends. I am your host KK Gupta here. I am a director of research in India and Association for Financial Advisors of India. Today is very important. This is virtual webinar regarding factoring, supply chain, and credit rating, which is important tool for financing to SME sector. So we are thankful to all my entrepreneurs, all my banker friends, and all my association members who suggested that we should have this factoring and supply chain, and more important is rating aspect, for which we invited all the eminent speaker who practically dealing with this subject, factoring, supply chain, and other information that is available with us. So we are also with us entrepreneur, Mr. Sumit Kumar, who has some practical difficulty. He must be facing it. So we are listening to him also, what type of difficulty he faced and how it can be from this webinar. It can be beneficial to the entrepreneurs. Till date, we completed under the banner of Research in India 273 webinars on different subjects, a recording of which are also available on YouTube. So we are more than 400 registration with us today. Beside the electronic media, people are joining with us on that platform. So you know that the factoring have a large scope, multi-trillion amount availability is there. So for which, when we're talking about a global factoring, so India is only less than 1% share in the global market. There is a lack of our institutions who are lending the trade platform, even a supply chain form. The size is very less. And as per the recent study by the DGFT, 11% of the SME only has access to the credit. And there is a large gap of 30 lakh crore rupees under the SME sector only. So there must be so many reasons for which we have discussed in previous webinars also. The major factor might be collateral security or something like that. If our SME sector goes for availing the facility on the trade platform, definitely it can be beneficial for them because the bill discounted under the trade platform is without recourse also. That means liquidity are available if you are discounting it. Even for availing the supply chain, you can also be benefited. Supply chain It is projected that by 2032, there is a market of 818.29 billion. That means compounded growth is 9.24%. So we will discuss all aspects here. Although we are talking about the SME sector, which may be small or it can be large also, cash flow management play a very important role for which platform and supply chain can be benefited. At the outset, I invite Sri Akhilesh Kumar sir, who is regional head, North Receivable Exchange of India. Mr. Akhilesh is the regional head, North at Receivable Exchange of India, where he lead business strategy and growth for the region. He brings strong financial expertise from his previous role at major firms like InvoiceMart, Crisel, and IndiaMart. An MBA graduate in marketing, he specialized in the business development and building strong client relationships. So, Mr. Akhilesh, the first issue is why the wire is shying to join the TED platform. What are the difficulty you feel that wire is not coming to your TED platform? Because I am after them, some wire, because still they are shy. Why? What are the reason you feel? I think you are the right person to tell what are the reason for that. Why the wire is not registering yourself in your TED platform? Mr. Akhilesh Kumar, please.
Yeah. So good afternoon to all. I think am I audible?
You're audible, sir. You're
Yeah.
audible.
So good afternoon to all the participant and thanks Mr. K. K. Gupta ji for inviting us and organizing such a good panel. Definitely this will help to MSME corporates. We will share some good information, good knowledge through this webinar. So we'll give a small brief about trades platform. So it will be better to understand how and why corporate are not coming on the platform, why corporate are coming on the platform, what will the beneficial for the MSME. So basically, trades is a generic word. Okay, it's a trade receivable discounting platform. It's a digital platform for the vendor bill discounting or the receivables of the MSME and payables to the large corporate. So basically, on trades platform, there are three participants. One is buyer. Buyer means a large corporate whose turnover is more than 250 crore. As per Ministry of MSME or Ministry of Government of India, it's mandatory for the corporate whose turnover is more than 250 crore. They have to mandatory themselves register on trades platform as a buyer. Okay. And recently, the definition of MSME also got changed from the Government of India. Up to the 500 crore company will come under MSME. So basically, trades there are three participants. One is buyer, second is seller, and third is the financer. So buyer, the large corporate, the seller, the MSME unit. The main USP of this platform is for seller part only MSME are allowed. So you can say this is the platform to support the MSME unit. Okay, third, the financer. We have all the trades platform are having more than 70 banks registered with them on the platform. So your question is why corporates are not coming on the platform? So all the three, four, five platform which are got license from RBI, we have approx more than 3,000 large corporate registered with us. So corporate are hesitating. It's many corporate are not aware. So we as a platform, getting themselves aware about the platform. Bankers are working on that to get themselves aware about the platform. Bankers are getting. We are reaching to corporate and convincing them what is the use, how you can get benefit to the platform. So corporates are coming. So many corporates are unreachable. We are trying to reach out those corporates. So main challenge why corporates are not coming is awareness. They're not aware about the trades platform. They're not aware about the benefits of the trades platform. You can see many corporates are already registered with trades, but then they are not using the platform. They are not utilizing the platform. They're not doing transaction on the platform. So main reason awareness. They are not aware about the benefit of the platform. Second, many corporates are cash rich. Okay, they say that we are a cash rich company, so what the use of this platform? Why will come on the platform? So There also payout. We are trying to convince the corporate who are cash rich to do the transaction on the platform. So third you can say it's the off the balance sheet limit. We say it's the off the balance sheet limit, but corporate say no, it will come under books, it will come under loan. So they hesitate to get themselves registered to the transaction on the platform. So these are the main challenge what we are facing in industry. The corporates are not coming on the platform, but we are reaching to all the corporate. All the platforms are trying to reach out to all the corporate, all the major corporate whose turnover is more than 250 crore. Earlier it was 500 crore. So we have registered many corporate. Main challenge what we all the platform are facing to activate those corporates. We are registering the corporate. Main challenge to activate the corporate and to get benefit to their MSME vendor. Okay. So that's all for the challenges what we are facing.
Mr. Kumar,
Yeah,
till date, as per my May figures, platform 2.38 lakhs crore rupees.
correct.
And it is also envisaged by this year, up to 31st March
Hmm,
26, it may reach to 3.50 lakhs.
correct.
Now, first point, what you're talking about, the awareness. To big corporate, we are talking about large corporate. Whether we cannot say this is a not large corporate now, this is SME sector also. It is
Correct.
250 crore you are asking. If
Hmm,
any SME sector is having a turnover of 250 crore rupees, it is mandatory for them also to come in the platform.
correct.
They, they will have to come. If it
Yeah,
is a less than 250 crore rupees, whether they can also be registered with you as a
yeah. Yeah, so I will come on that point also. If any corporate is MSME, suppose they're having turnover of more than 150 crore, they are having turnover 200 crore, the corporate is rated from the any external rating agency. They can come on the platform as a buyer. They can utilize this platform. For financial part, for giving limit on the platform, that is called trades limit, the external rating is mandatory. But banks will brief you how the corporate get the limit on the platform. To get limit trades limit on the platform, rating is mandatory for the bank side. Some private banks are there who gives limit without rating also, so they can register on the platform as a buyer. There is no restriction.
now once a buyer registered under a platform,
Mhm.
to getting the limit approved, it is a responsibility of the trade or it is a responsibility of the buyer only.
No, it's our responsibility of trades platform. So buyer don't need to reach out to any banks for the limit. We as a platform reach out to all the financer as per the rating of the company, as per the turnover, what the parameters bank have to give the limit to the corporate. So we reach out to all the financer to get limit for
My
with
point is
that.
simple. My point is simple. If in the SME sector, his turnover is 250 crore rupees
Okay,
and his rating is investment grade,
okay,
he's coming to you, he already availing limits from the bank. You
okay,
can say 50 lakh, 50 crore rupees, he availing the limits.
okay,
Now I want that he should be registered with you. Now he wanted limits for a trade platform.
okay.
So how you are managing with the lender? That is the most important issue because he has to approach as a. My point is very simple. Whether it's a working capital cycle, it will be included. If it is not included, that you are the doing it. So these are the sector. I think this is the most important issue with
Yeah,
our SME sector to how to get the limit approved.
yeah. So we'll come on that point also. So corporate no need to reach out to bank. Just corporate have to get themselves registered on the trades platform, any trades platform.
Okay,
After getting themselves registered on the platform, we as a platform reach out to bank,
okay.
okay, to get trades limit for them. It doesn't matter. Suppose any MSME is having turnover of 200 crore, okay, and they are having limit from for they are having bilateral limit from two or three banks. Suppose they are having bilateral limit of 20 crore from SBI, IOB. They are having utilizing the bilateral limit.
Okay.
So the relationship doesn't matter. We as a platform reach out to bank as per their rating, and we arrange the trades limit for them. The limit is without collateral limit. Okay. If they are having investment grade rating, means triple A minus and above rating, if they are having, we can arrange easily limit from the banks. So basic
For a
criteria.
A general question, if the turnover is 250 crore rupees, he
Mhm.
already availing 50 crore from the banking sector.
Yeah.
How and he having a investment grade rating. How much limit he can get?
So suppose, give it an example. Suppose any corporate is having triple B rated corporate. Okay.
Okay.
Suppose he is a triple B rated corporate. Turnover is up to 250 crore. So
Okay.
on the platform, easily they can get limit of 20 to 30 crore
That
from different banks.
that means 10% of the total turnover.
Yeah, you can say 10% total. There are parameters of all the banks. Here, the parameters matter. Suppose some banks give limit only the corporate who are having any bilateral limit for triple B rated corporate. Okay, so we have less number of bank for triple B rated corporate on the platform. But if the corporate is having turnover of 200 crore, 250 crore, they are having bilateral limit from SBI. They are having bilateral limit from Canara Bank. So they can get easily limit on the platform through those banks.
That means
SBI
the
will give,
limit will be arranged by you. That's a
yeah, limit will be arranged by the trades platform.
this is a very good
This is
information.
you can say best USP of this trades platform.
Now
Corporate no
question,
need to go to the bank.
another question come
Huh?
for the vendor. Now you told him wire. If
Yeah,
wire having a turnover, he have investment grade, he can approach you, get you registered. After that, you will manage the limits around 10%. We are talking about that is not a mandatory. Taking 10% around, he can get the limit of what his turnover is there. That is beside the working capital cycle assessed by the bank. This is okay now. Whatever this statement is okay. Another question is now vendor is coming. So he is supplying the goods to a buyer.
large corporate.
Now he has to also be registered with you, vendor.
Yeah. So all the participant registration is mandatory to get their bills discount. So buyer also have to get them some mandatory registration, and vendor also have to get them some registration on the platform.
So for vendor, now he's supplying to that company who is having a 200 lakhs crore, 200 crore rupees turnover. He's supplying a 5 or 10%, 10 crore rupees a year.
Okay.
So he's coming to you. I want to discount this bill. So whether he also limit will be there or without limit he can discount.
No, no, limit will come on the large corporate.
That I follow, no problem. But if he coming with a bill of 5 crore rupees,
Okay, MSME.
the SME is there, so you will
Okay.
discount it. He is not limit is required from the
No,
seller.
no, no, no.
So
Seller don't require any limit. The
only
corporate whom they are supplying goods,
okay,
they
that
must
limit is
on the
required.
buyer, and they will get a limit on the platform.
Okay. Mother seller has no limit, like he has
No,
to
no.
get a registration with you
Just seller have to get themselves registered on the platform as a seller.
as a seller.
Yeah, limit not required to them.
For your seller, I feel you're asking so many documents. I think
Correct.
KYC is okay.
Correct.
What is their balance sheet? What is their financial position? But why you are asking a seller their financial position? Because he is
Correct.
the buyer, he is a stake on the buyer. You are
Correct.
taking stake on buyer. Why you are asking so many information from the seller?
Correct. Actually, this is a RBI guideline. We have to follow that RBI guideline, and we have to collect all the necessary KYC documents from seller also to get them.
KYC okay. Sir, I told you KYC okay. What is financial?
We don't require financial. We require financial to verify that company is MSME or not.
That is registration is there. They will give you the registration.
No,
Udyog.
no, they can give the MSME Udyam certificate.
Yes,
Okay.
yes,
But
yes.
to verify the company category or the company turnover, through turnover, we can verify the company's MSME or not. So we
That
require only one
That
page
means
profit and loss page
you
from
are
them.
not concerned with the financial, with the net worth, with
No,
other
no,
current assets, current liability. You are not
no.
concerned
And
with that.
to
You are
just
concerned with the sale figure only. Okay.
Yeah, we are only concerned to the two page of the balance sheet, profit loss page, and the
Yes.
annexure that define कि
Yes.
company का working capital bank है या नहीं कोई. Because as per RBI mandate for trades, we require the CC account. If seller is having CC account, we require CC account only.
Okay.
So balance sheet only we can verify the company is having any working capital from any bank or not. So we just require two page of the balance sheet.
So you require a transaction also statement with you. All
No,
the
no,
time.
no. We don't require any transaction shipment.
So I think you are the helm of your all the trade platform.
Yeah.
Whether you feel that policy which is in process, required some changes.
Sir,
First,
policy is good. I can't say that policy time to time it's getting changes. Earlier, the
at
500 crore.
present, what talking about at present, what is the policy there?
Uh,
Because this your recording may go to the ministry. I'm telling very clearly.
okay.
Any suggestion from your side as a trade platform whether any changes are required?
Yeah, some suggestion we can give as a platform. Actually, it's mandatory for all the PSU to get themselves registered on the platform. PSU are registered on the platform, but they are not doing
Mandatory,
transaction.
government has already given mandatory. The
Yeah,
PSU
yeah.
are
Government has did
mandatory.
mandatory
They are
to
not
register.
doing it. Let the government should do something for that.
Huh.
Yes, this is first
So
issue.
In
Government should
PSU,
ensure.
we want
Okay. In
in
their
PSU we
balance
want
sheet,
push from government.
whether it is possible in their balance sheet, they should have to declare that they are registered with the trade platform.
Yeah, yeah, it's mandatory. They have to submit to ROC and Corporate Ministry of Corporate Affairs that they are registered with trades platform.
Okay, this is
And
one.
ministry is asking monthly data from all the PSU entity that you are registered on the platform. How much discounting you are doing?
Then I think there is no problem. There is no problem at all.
But, but but PSU are not doing that much transaction. We were expecting good volume from PSU. So major procurement in MSME is to the PSU entity.
PSU will not do, only the seller will do it. No?
Seller will do. In PSU,
Seller.
sir.
So we have to educate the seller. That's why my
Yeah,
point is coming. For PSU supplier, the seller should do it.
correct. I am coming on that point also. We need to aware the MSME unit for the trades platform.
Except
Okay.
for a trade platform, where the infrastructure firm, they are also eligible to
Yeah,
get the
yeah.
infrastructure firm.
For any infra company.
Yes,
Yeah, yeah. Infra company is there. They can also get their bill discounted.
they can also do it.
Yeah, yeah. Many good. There are a lot of infra companies doing utilizing the trades platform, getting benefited through trades.
So I will come back to you. I think very information you have passed on to us because it is beneficial for our entrepreneur and our financial advisor who are asking me so many information on that subject. We will
Hmm.
come with the questions also. Now I'm coming to Sumit Kumar. He is
Yeah.
the founder of Headcap B2B. Mr. Sumit is a founder of Headcap B2B, a graduate of TISS. He successfully built profitable business from scratch. He combined deep HR expertise with a strong track record of helping Indian SME sector and startup scale efficiently. With a history of leading multi-crore companies, he is a proven business leader. He is a business leader. So, Mr. Sumit, you are doing so many information with the. Tell me, as a entrepreneur, what type of difficulty you envisage for discounting your bill under a trade platform or any supply chain? Have any experience with you? Let me should be very free and fair. So, so that my other people can understand what are the difficulty you envisage and how our factoring people or supply chain officials can respond to your difficulties. Please, Sumit, sir. Please.
Thank you, Gupta ji, for having me. See, I'll quickly start from the first part, which has already been touched base, which is about the awareness of the entire platform. Right. So I think awareness is something which is very critical for any kind of initiative like this to happen. I personally feel that our awareness is very limited when it comes to even mid-sized corporates. Right. I'm not talking about big corporates. Right. For example, there's a lot of infra. So we work. It's a B2B operates majority in green energy and infrastructure sector. Right. So there where we get a lot of payments through RAXL and M1 Exchange, etc. We are getting the invoices discounted there. But the issue comes when we want to pay to our manufacturer, when we want to pay to our vendors, right? So it is clearly mentioned that even if you're under 250 crores, you can register, right? But the conditions are, for example, you need to have a credit rating. Now, for an organization which is 3 years old, We are growing at a very good pace, right? We are growing at almost 250% year on year. And this year itself, we are looking to cross almost 350, 300 odd CR of our top line. And we are profitable despite the growth. One of the biggest challenges which has come is from a credit rating perspective, right? Now, a startup like ours cannot compete with a very established company when it comes to ratings, right? So I have got a couple of ratings done, and the data which we have got back of, for example, let's say interest coverage ratio, or we are talking about your EBITDA covers which are there, or the profitability which are there. uh, See, it's not possible for an organization like a startup to actually grow and also have a very good credit rating, which is in comparison to a established firm, right? That's not possible. One of the things which I discussed, like the first thing which I asked I'm not going to name the agency, but the first thing which I had a word is that do you have a framework for the startups to do the ratings, right? Uh, there aren't a lot of frameworks, honestly, right? If India has to really grow at the pace it has to grow, it is the MSMEs of almost 70 million plus MSMEs who are there. They need to be supported, right? There needs to be a different framework which is keeping in perspective a lot more other factors, right? So, for example, if a company is supremely not profitable, right? It's, let's say if interest coverage ratio, etc., are not very good, but the company is very good when it comes to doing the repayments. The company is very good in terms of scaling up. The company is very good in going for the sectors which are, let's say, untouched, right? These are few factors which also needs to be considered while we are approaching the entire credit ratings. Because today I have a credit rating, but that for that credit rating, I'm not going to get any money possible from any of the platforms. Because my rating, because they have given this thing that okay, you need to have this much of profitability. I mean, general understanding of things. But in order to actually make the platform used, I need to have a certain grade of rating, then only I can use this platform. So, which I cannot do today. But there needs to be a mechanism where the rating agencies need to prioritize organizations like us or the manufacturers which are very small, for that matter, who are not very old, but they're doing the business okay. Then that needs to be supported. And that kind of information or awareness is something which we have not got till now. If my esteemed panelists can guide us, that would be great, to be very honest. Then we can help us in discounting because we have so much order, we have so much of business, but we don't have that much of capital to actually do that business.
Very nice, very nice. I think we are with us Mr. Shah, who is Associate Director of India Rating and Research. I think he can respond to your point. I think you have raised a very excellent point because a startup or other thing, they are not getting it. I think this is also in the mind because rating to get everything is okay with you, turnover is there, growth is there, still you are not getting a rating. I think this is an important aspect for which Mr. Shah can respond. Mr. Shah, you please give your thought on the subject, Mr. Shah.
Yeah, hi. Thank you very much, Mr. Gupta. I hope my voice is audible.
Audible, audible, sir, audible, please.
Sure. And thanks a lot, Mr. Sumit, as well, for sharing some of your concerns. In fact, having spent 17 years in this industry, I've worked with CRISIL earlier. I've been with India Ratings for good 10 years now. Obviously, these questions have been coming through, a lot of times from especially on the emerging and mid corporate entities. That's how we classify the MSMEs internally. Uh, I think, maybe I have prepared a very small 6-7 slide presentation. Mr. Gupta, if you permit me,
Please go ahead. No
sure.
problem.
I hope that answers some of the questions. Obviously we'll be happy to take more questions around it.
Okay.
I hope my screen is visible, sir.
Visible. Please go ahead.
Sure. Okay. I think, sir, before moving to the specific of ratings, a lot of people here would be aware about what India Ratings is, but I think maybe I'll just take a moment to speak a little bit about our organization. We are a 100% subsidiary of Fitch Group. Fitch Group has been in this business for more than 100 years now, and it has operations in more than 30 countries. We are among the top three credit rating agencies in India. We cover corporate issuers, we cover FIs, urban local bodies, structured finance, project finance companies. And talking about the specifics here, we have rated more than 2,500 entities in mid and emerging corporate segment. So obviously we have global expertise of covering corporates across the world as well as India. In India, we have presence in 8 cities apart from 4 metros. We also have offices in Bangalore, Hyderabad, Pune, and Ahmedabad. So that's just a bit about India ratings. Now, coming to the criteria, I think here I would try and answer some of the questions, which apart from Mr. Sumit, I understand is there in everybody's mind. Everyone here is probably trying to understand, uh, uh, why these smaller entities cannot be rated, in line with the larger entities. And obviously, there needs to be a different framework. I think, see, first thing here is, RBI has mandated that whenever there is a credit rating, all entities across the country have to be rated on the same scale. May it be large corporate, may it be mid-sized corporate, or may it be small-sized corporates. So when you are rating all the entities on similar scale, the differentiation in rating obviously will have to be there. The fact to factor in the size of the entities, the kind of on-balance sheet liquidity they have, the kind of credit metrics these companies would have. Obviously, bigger entities with better liquidity, better credit profile would be rated higher than the mid-sized entities. The mid-sized entities would somewhere be rated somewhere in the middle of the rating scale, while the smaller entities rating would be on the lower side. As I said, the differentiation would be there in terms of size and the balance sheet strength. Now, what RBI and SEBI, they regulate the credit rating agencies. Now they have given a very, very clear criteria, a default recognition criteria, which we also call as probability of default. Where they very clearly say that if there is even a 1 day delay in the repayment of your debt obligation or a 1 rupee default, the rating straight away goes to D. If your debt is to be serviced on 30th of the month, you service on first, the rating goes to D. If you have to pay, say, 100 rupees, you pay 99 rupees, your rating has to be D. So a rating agency will always look at the liquidity very, very closely. Now, what are the parameters we assess when we look at liquidity? One is the internal source of liquidity. What is the free cash flow company is generating? What are free FDs and liquid investments on the balance sheet? Now, obviously, everyone here would understand that since you have to service your debt regularly, you need to constantly have liquidity on your balance sheet to ensure that there is no default. On due date, there is money in your account, and your debt is serviced timely. So that is the reason why we look at liquidity very closely. External sources of liquidity, what we look at is your unutilized bank lines, access to capital markets, how consistently promoters are able to pump in money in the business. Now, talking about track record, see, given the criteria we follow, uh, timely debt repayment is a prerogative. Uh, uh, if the debt repayment is not timely, the rating straight away goes to D. Now, if the debt repayment is timely, that would not necessarily mean the rating will go up. Obviously, rating would go up if your balance sheet strength also showcases the ability to continue paying the debt obligation timely. But there are a lot of companies who prepay their debt, so that definitely is considered credit positive. Apart from the other parameters, a lot of companies ask us that you look at my collateral cover. Probably say 2x, 3x kind of collateral cover. Collateral cover would showcase the flexibility to borrow, but we don't consider that in default. Obviously, because collateral liquidation comes, after the account has probably become an NPA. Much later after the default happens. And our guideline is very clear about a 1 day 1 rupee. So that's the reason why collateral cover will not be considered as a liquidity strength, but it will showcase the flexibility of the company to borrow further if they have adequate collateral. So this is the very broad criteria. I have collated some data. Probably I'll not spend much time on that because on the interest cover and on the leverage part, but, more or less the audience are aware what are the parameters companies look at. But obviously in our study, what we have done is that we have classified less than 250 crore entities as emerging corporates and 250 to 1,000 crore as mid corporates. So this is the median interest cover that we have observed in the entities in last 10 years. This is the leverage number. So just to summarize, obviously some of the pressure points that we have been seeing has been working capital issue, lack of adequate finance at competitive rates. A lot of MSMEs have been facing these challenges. I think one thing that I have observed and probably seen from my experience, interacting with the smaller and mid entities in my tenure, or in my career, I would say, lot of these entities are promoter driven entities. Obviously promoters are hands-on in their business. But a lot of these companies probably don't have the capable second line, like a CEO, CFO, or maybe a HR head, or say a chief operations officer. And I've clearly seen that this kind of expertise, having this kind of people on board, really helps from these smaller entities to translate from an emerging to mid corporate and eventually large corporate. Yeah, I think broadly this is something I wanted to highlight. Yeah, Mr. Gupta, over to you. Would be happy to take forward anything else.
Mr. Shah, I think you are a very important person. The more weight or buyer payment or view hold many of the healthy position. For the rating point, what we are talking about for SME sector. So what you told me, it is RBI guideline, 1 day default mean it will be degraded. I'm not talking about that. If a SME sector paying repayment regular, लेकिन their EBITDA is not so much, even profitability is less because there are some other expenses. And when you're talking about the balance sheet, now assets-based lending has already gone. Now we are talking about the cash flow lending. If a SME sector based on the cash flow lending, whether rating agency cannot assess the rating instead of going to their balance sheet. This is the first issue. Second issue, if they are not having a proper cash flow, you can say, so whether you cannot help these people to have some leverage for the SME sector that they can be at least a investment grade. Now position entire going on change because now RBI, even government has emphasized for SME sector, they need not to ask for any financial statement from them. Even they advise the banker, you take the statement from their GST return. If they are exporter, custom data available with you, or a account statement where they are turning. Whether rating agency cannot go in a similar manner as bank is going for the rating, for a financing, not asking for their any data from the available data, whether you cannot do the rating. Please, Shah.
And Gupta ji, also a couple of things. Just wanted to add what you have mentioned.
Please, please.
Those are the three things which I think probably rating agency should also highlight, especially from a very SME perspective. The first thing which is there is regarding the entirety of, for example, collateral. Like, for example, what Mr. Shah said, that collaterals cannot be seen from a retrospective perspective. I mean, it's not a really important parameter, but it is fine for a company which has 1,000 crore book. From that perspective, collateral is not very useful. But for a company which is 100 crore books and there the collateral of 10 crore or 15 crore is given, that is huge. That is huge. And that is something which needs to be taken into account because it's basically expecting an SME to work like a corporate without actually facilitating the SME with the benefits of the corporate, right? So it's not possible, right? It's not possible. You cannot grow if you are getting ratings in principle with the corporates because obviously they're going to get better ratings. You cannot compare. It's impossible to compare, right? So that is the first point, sir. The second thing is what Mr. Shah also mentioned, that all the things which are there, for example, repayment and let's say GST filing, corporate governance, in any of the reports, I mean, I've not got a lot of reports, but any of the reports from the rating agency, none of the places it has mentioned that you have done this thing, which is good. So we should be giving you more rating, a better rating from again SME perspective, right? Shouldn't that also be a pointer which should be considered? right? So, and just a couple of things.
Sure, sure. Thanks a lot. I think, Mr. Gupta, probably what you started with on the repayment track record, I'll, probably again come back to what I said, because that's a prerogative for any rating. If the repayment is not timely, the rating straight away goes to D. Now, if the repayment is timely, that may not necessarily mean that it's an investment grade rating. And obviously, we look at some of the additional parameters as well. In terms of on-balance sheet liquidity, the credit metrics, the promoters profile, the company's growth, track record. These are some of the lot of these parameters are considered into the rating. Uh, on the collateral side, I think maybe Mr. Kumar, like I said, again the criteria is 1 day 1 rupee. We take comfort from the collateral just to assess the ability of the company to borrow further if they have adequate collateral. But the collateral would not go into our assessment of probability of default, because that comes much later into picture. Banks take a lot of comfort out of it, because obviously banks look at the cover. If I've given 100 crore, probably if I have 150 crore, then my money is secured. But from our perspective, it's clear 1 day 1 rupee. So it is largely how cash flows are, how liquidity are. And again, since the rating scale is same across corporates, obviously the criteria would also we have to follow the same criteria, because the differentiation will have to be shown. If a corporate is much larger in size, they are doing much better. In fact, sometime back, RBI along with NSIC had developed different scale for SMEs. Probably most of the people here, in this webinar would be aware about it. So government used to fund that subsidy, so that was for the smaller entities, wherein MSME would be compared with MSME only. They will never be compared with any larger entity. So there the differentiation would come, and the better MSMEs would be rated higher. But I think now gradually government has stopped funding the subsidies, so that scheme is no longer active now. But government had developed it. And it was pretty much active for a long period of time.
Mr. Shah, major aspect is our SME or startup, because though they have no history of their transactions, they have started a new venture. So now every bank is regarding what is the rating. If you are not rating investment grade, they will not give a finance to them. How the problem can be solved? Major issue is you are such an experienced person. Have you any suggestion from your side that the SME sector or a startup who has no track record, still they are doing a good business, they have developed something, they have some innovation product, and government is also recognized under a startup, they are getting the funds from the bank, from the government also. Whether rating agency cannot help these people to consider their performance only as a major factor to have a rating. Have any view on that, or you can give some suggestion to the government because you are such an experienced person, so that our SME can is playing very important roles for the Indian economy. Now we are talking about the GDP. 50% of GDP may coming from the SME sector only. Export sector, you see the employment sector, everything is there. Lekin if they are not getting a rating, sir, it is a very difficult proposition. So have any suggestion on that aspect, sir?
And sir, I think government has given a lot of importance to MSMEs, and they do consider that as the growth engine for the economy. In fact, last few budget sessions have been giving lot of lot of announcement has been around, how to ease doing business for MSMEs. But I think some of the, criteria which we had about some time back, where the government then subsequently discontinued the subsidy. So a lot of companies didn't avail the benefit of the MSME NSIC rating. I think some criteria around that, would obviously help rating agency as well to form a framework where just the MSMEs are compared across each other, and probably they are not compared with much larger entities, so that at least that would give a clear picture, and a better MSME would be able to differentiate itself from the entities which are not doing well.
My only point is any suggestion from your side so that we can tell the government this can be done, so rating can be improved. Any suggestion from your side?
Maybe some criteria, if they develop, which are specific for the MSMEs, are developed in the sense probably they give the leeway to rating agencies to develop a criteria, and probably they advise the rating agencies that you develop a criteria and then you rate those entities on that criteria which you develop. Probably that would help, these entities differentiate themselves.
In your views, what criteria should be there to have a better rating for the SME sector?
Criteria, so like you said, see, when you talk about corporate governance, obviously larger entities would obviously have much better corporate governance. But in terms of smaller entities, there is differentiation. Some smaller entities have very sound corporate governance, and I have experienced that, and some of them don't have. But in the rating assessment, at times some of the softer aspects do get lost. Because at the end of the day, it just boils down to what kind of liquidity they have in the balance sheet to ensure that the debt is serviced timely. So some of the criteria around that, where some of the softer qualitative aspects are also looked at in terms of corporate governance, in terms of promoters own background, how they have scaled up the business. Some of these things would surely help.
Yeah, what you're talking about, we are also working on that angle. So
Okay.
as a researcher in India, I'm telling you, we are coming out a package. So I'm talking about so many chartered accountant firms also. Whether the SME can outsource their accounting system to outsource person, so
Okay.
that every cash flow can be prepared for that. So there should be a corporate governance for that. That we are also trying at a smaller cost. We are also negotiating with the insurance companies whether they can have a coverage for the losses. If the company incurred, SMB incurred some losses due to some unforeseen circumstances, whether that loss can also be covered by the insurance company. I think that is also being done. So receivable, we are also talking to them, receivable guarantee should be available, which can give a comfort to the rating agency that they can consider the rating improvement for that. I think that aspect we are taking into consideration so that even I'm just telling you if a SME sector is there, if a big corporate there is subsidy of small and you're giving them A rated, double A rated because corporate guarantee is available. You feel that no loss will be there. Such small people cannot give a such type of corporate guarantee or something like that. That is also difficult in this way.
Right.
So that is the issue, I think, which we are talking about. Sumit, you want to say something else? Sumit, any point from your side?
So not for this thing because I think here I personally feel that the rating agencies' hands are really tied because they also have to operate in a framework. So I think the government has to really push for a separate agenda for the organization where the rating are not in parallel, but it's differentiated when it comes to organization like us or similar organization uh, in that way. But one more thing from a again from a discounting perspective is that if something like what M1 or RIXL etc are doing, uh, can they not fund through securities? I just want to also understand from that lens because I tried understanding, but I was not able to get a lot of information on. For example, like a SME like ours, we have some unused capital, right, in form of an LC or a BG, etc. Because a normal immovable capital collateral is not something which a typical platform like a TREDS platform can take, but something which is more liquid. Can that help in financing or getting the discounting or for the vendor payment at a let's say 1:3 ratio, for example? Is that possible?
I think if you have liquidity or something available with you, there is no problem at all. If you are talking about the liquidity are available with you and you want a financing, some of the core assets are available with you, which you can give as a collateral security. I think such the banker can take a call on that subject. No problem for that. Rating agency nothing to do with this. They can banker can take a call on that if you have a liquidity call. Now I'm coming to Sri Munish Arora, who is a senior director, MI Exchange. Mr. Munish Arora is banking veteran with 27 years of experience, currently serving as the S2S business head at MI Exchange. He has proven track record of building and scaling SME and digital lending business at the top institutions like Citibank, Yes Bank, DVS. He is alumnium of IIT Bombay and Delhi College of Engineering. He specialized in supply chain finance and business strategy. Sir, you are a mentor for the supply chain. So I would try to talk to you so many times, like and unfortunately I could not have. This supply chain, what is the supply chain, sir? And how it will be helpful to my SME sector? I think this is a major aspect which I want to talk to you. And because you are a helm affair of the supply chain and doing so much great business, to give our some view to the our entrepreneur, how my SME sector can avail this supply chain. Mr. Arora.
Thank you, Mr. Gupta, for giving this wonderful opportunity to interact with you and the entire panel and your entire set of participants which you have. So supply chain, are two types, right? One is physical supply chain and another is financial supply chain. So physical supply chain, we are all aware that when you run any factory, you need all kind of raw material inputs. You need logistics. You need many consumables and many other service vendors comes into play. To make sure that your factory is running 24/7 as per your needs, right? So that is the supply chain which got disrupted during COVID time, and that is where supply chain actually has come into focus now in a bigger fashion post COVID. That our dependence on critical materials, with critical vendors, if any disruption happens over there, suddenly your fight, the entire machinery comes to screeching halt. So that is where supply chain has become very important on the side of procurement. But supply chain doesn't end over there. Supply chain moves to the your distribution also on the your receivable side. You need to have, you are producing goods, you are having very good offering in terms of services, but your buyers, if they are not getting the right solution from you at the right time, and if they are in the disarray of in terms of disruption can happen on that side also. So as a running organization, you need to have a very robust entire physical supply chain. So now the it is very nicely intertwined with the financial supply chain, because the entire physical movement decides what product you can offer as a in terms of financing also. So you have a large purchase order being taken from large corporate. Now that purchase order has to be executed, right? So for that you have to mobilize all the resources from the physical world, but financing of that normally happens only when you're ready with the finished good, you're ready to dispatch those goods to the buyer. Then there are a lot of options which comes in terms of post shipment financing, which we call it. So the entire realization of the money which happens, as you get the goods from the supplier or you supply the goods to your buyers, the entire working capital cycle in terms of inventory funding, in terms of your stock funding, in terms of your finished good funding, in terms of your receivable financing. So entire payable, receivable, everything again comes into play in parallel with the physical supply chain which we discussed. So this is the entire supply chain concept which is prevalent, where we do funding basis the underlying movement of goods and services in the entire flow of material from the input side to the output side in terms of buyers. So this is in nutshell. I thought we'll be happy to discuss more if you want anything more on the light on that.
For Arora, for SME sector, when we are talking about the supply chain, as you say, is physical or financial. Physical means from a raw material to a production, then finished goods, sale, ultimately the cash flows, working capital cycle, you can say. When we are talking of the financials, it is only for the starting from the bills or it is starting from the purchase of raw material.
It is starting from the moment you have orders in hand, your need starts from there. Without orders in hand, the supply chain doesn't start. You have to have business in your hand, then only the financial supply chain kicks in.
Now, point is, my SME sector who is enjoying 5 crore limits, he suddenly receive a 50 crore rupees order, okay, from a reputed or a government. Now, how the supply chain, who's financing the supply chain, how they can be helpful to this SME sector? Because banker is not doing it, because current ratio is not there, margin is not there, so many collateral is not there. Whether he got the order without any collateral security, he can avail the finance from that, from raw material to finished good or finished good to receivable. Up to that extent, supply chain, whether he can get it, if he can get it, from whom he can take.
So, as I think very rightly mentioned by my fellow panelists, that in the financial supply chain, you need to have supplier, buyer. Of course, you need financier for financial supply chain. Otherwise, it is only physical supply chain. If it is only supplier, buyer, it is only physical supply chain. So, yes, financial supply chain has now many products to offer. Over here, including very challenging product called purchase order financing, and then we have got purchase invoice financing. Then of course we have got factoring, reverse factoring. All these products comes into play. Sales invoice financing when it is receivable financing, and of course trades financing also is a receivable financing. So all the products comes into play depending on which stage of your production or which stage of procurement you are into. Right, as you rightly mentioned, big order has been received. Now how to finance that? So that's a very classic problem, Gupta ji, you have touched upon. So the moment you have got a bulk order, of course, the order has to be from a reputed buyer. Then funding becomes slightly more available, amenable. Options are available. If it is from any MSME, getting a bulk order from any MSME, it is actually a risky proposition that I can give order to another MSME. It can be accommodation also between both of them, right? So easy. It's easy if you can get a bulk order from large rated corporate, as we always have been discussing for last some time. Uh, so one is that. Second is you have to have some experience of supplying the same product or same services. It should not be unrelated to your existing business. You are currently manufacturing axles, and tomorrow you get a bulk order for crankshaft, right? So it is a very different material, right, altogether. So if you are in the same line of business, already are supplying to Maruti, Tata for donkey years, or maybe at least 12 months of track record you have, then it becomes more easy for any supply chain financer to come into play, because they have seen the ledger of how this MSME is getting the orders from this corporate, maybe 1 crore, 2 crore initially. Now they have got 10 crore orders. So you will have still some products being made available, as I told you, like purchase investment financing or PO financing. But the moment it is coming from a unrated another MSME, which is again not reputed, then there is a risk of default from the large buyer itself. So then funding becomes limited, options become limited over there.
Another point is very simple. A SME sector, he is actually, I'm giving a practical example of Lucknow. So he is supplying to the government. He is manufacturing the electric bulb and electric equipments. Suddenly he received the order from the government. Now the existing banker said, no, you have no margin. We cannot give you the finance. You bring the margin, you bring the capital. But he got the order. So this problem, how you can solve this problem? Who can lend them?
So as you are aware that every institution, be it bank or NBFC or any other regulatory entity, they have a framework of having a funding or lending, being done responsibly. So because it is ultimately the depositor's money, at the end of the day, right?
That we understand. There is some
So
chain there who can give a finance to them. Point is like simple. Whether a banker is not agreeing to that,
I'm
and
I'm saying yes. Financing can be given, but not irresponsibly. If your money in the business or net worth in the business is 1 crore, and you
Sir,
expect 10 crore funding to be given by somebody, no, funding cannot be given. It has to be in proportion to what your ability to serve that particular debt is there, right? So
yeah,
ultimately, debt servicing becomes a very important parameter in which has to come into play for sure.
that means order has nothing to play a role. Important aspect is their own capital should also be there. Their own stake should also be there.
Yes.
Will to execute that order. That is a major aspect in nutshell what we are talking about.
Yes. So for that purpose, government is supporting them by giving, or corporate is giving them, some cash advance. If they extend bank guarantee or LC to that particular supplier, buyer, the performance,
If they
uh,
open LC or something like that, that is possible.
that then it is possible.
But
Otherwise, PO
clear,
financing
clear
is
answer,
given
clear
basis,
answer.
certain
Thank you,
conditions.
Ronaji. Thank you very much. Like, how it is different between a trade platform and supply chain? What is the difference between the two? If we are talking about the supply chain, we are talking about the trade platform, how we can differentiate between the two?
So Trex platform is only serving one leg. MSME has got all the goods ready, and they have invoiced it already. Invoice is accepted by the buyer. Only that leg is financed by Trex platform. The limitation of Trex platform is MSME has to be seller with a valid UGM certificate, and the corporate has to accept the bill and make and confirm that it is ready to make the payment on the due date. Till the time these conditions are not met, the threats doesn't come into play. Whereas supply chain finance has a whole gamut of products, as I mentioned to you, not limited to only MSME only. It could be non, because when you are a corporate, you can have a large corporate supplier also, and you can have a MSME supplier also, and you can have imports also, right? Whereas TREDS doesn't finance import financing, right? So TRED doesn't finance non-MSME financing. So that is the challenge of TREDS. It is only serving a purpose of MSME selling it to the large corporate. That invoice is financed on the TREDS platform. So that is solving quite a problem, quite a big problem. It's not a small problem. As you know, right now, 40,000 crore worth of invoices are financed monthly on the TREDS platform across all the 5 platforms. So it's a very big in demand which is being met through Trust platform. But
Very big.
as you mentioned in the initial, the demand is actually in $1 billion, not the number which I told you on threats.
I agree with you. I agree with you because today, actually, as per the figure available, 2.38 lakh crore rupees has given on the trade platform, and it is we say that during this year it may go to 3.50 lakh crore rupees. Thank you, Rodaji. I think excellent. You are always excellent. Today, more excellent. Thank you very much. So I understand something regarding the supply chain, how it can be beneficial from the trade platform. So we also, as a researcher in India, we started a desk of our SME sector, and we put a lot of people, which we are getting so many proposals within a period of 2 months. We receive a great response. We are also trying to have a package to the SME sector where we can give from the accounting to their cash flow management to their innovations, and even for insurance, their loss insurance, profit insurance, we will also undertake shortly. Beside that, making funds available from the bankers or from the NBFC or any from the lenders also. That is a research in India. We are a merchant banker, we are investment banker, we are giving training to the bank. We are also doing techno-economical viability study. We are in insolvency. So many sectors we are doing it. If any help is required for DP or other things, we are there at your disposal. So lastly, I want one word from each of you. Give your last advice to our entrepreneur who is listening to you, starting from Mr. Roda. Roda sir, anything, one word what you want to advise to our entrepreneur who are listening to you.
So I would like to give assurance to all the entrepreneurs and the entrepreneurs over here, that we at supply chain finance side of the business are creating a lot of alternate, funding solutions for you, which is actually can be called a growth capital over and above your normal working capital. As long as you are growing well, as long as you are keeping your track record intact, without any default and overdues, there are plenty of options available at a very competitive, interest rates. And we have actually come very close to the working capital pricing in case of triple B rated entities. We have done better pricing than even CC limit pricing if it is a double and above rated entities. So we are coming close to you. The only thing is that you keep growing and we keep adding value to your business by giving you incremental capital info growth capital in terms of supply chain financing. So just keep your orders flowing in, keep serving those orders without compromising on quality and intent from your side. We'll be there to serve you.
Thank you, sir. Thank you, Sumit.
Sir, I would just say that I think all the MSMEs startups should be given the benefits of, or I would rather say the hidden benefits which are there, which corporates get. That is something which should be provided to us. We should be rewarded for doing the good work, right? And to be in very simple one word, it needs to be very inclusive. If it is inclusive, what Mr. Arora said, he will reach faster to us. But for that, inclusivity is very important.
Very nice, very nice. Mr. Shah.
Yeah. Maybe, sir, I'll just second what Mr. Arora and Mr. Kumar said. I think some of the startups and some of the entrepreneurs have been doing wonderfully well. And in fact, we as a agency also learn a lot from them. And and obviously government has considered MSME as a very critical segment for their growth. And just best wishes, sir. I think the rating will obviously follow. If the business does well, obviously rating is eventually the outcome of how well the business is doing. So yeah, my best wishes to everyone.
Thank you very much. Akhilesh, sir. Important
Yes.
person.
First, to sir, thanks for organizing such a good webinar. Definitely, this will help to MSME. So we'll ask the MSME who is here or who will see the video. So just check with your buyer, the, whom you are supplying product. Just check with that buyer they are registered with trades or not. If they are not registered, it's your responsibility also to guide them, to convince them to get themselves registered on a trades platform, so you can get your bill discounted through this trades platform. So platform is so much useful for MSME, it's so much supportive, paperless platform. So come and join the platform and get the benefits of the trades.
Thank you, Akhilesh. Thank you very much, all my eminent speakers. I think we talk in a practical manner for today. So I also learned so many things today in the webinar from a rating, how the rating can be improved. And we are also doing something so that my SME sector would have a good rating. Akhilesh, thank you very much. Thank you, Sumit ji. Thank you, Roda sir. You are our
Thank you, sir.
mentor. You are our guide also for the supply chain. We should see how a researcher can work with you for a supply chain financing, because SME require your help. So we'll try to talk to you, see how we can work together. I'm also thankful to Mr. Shah, who has suggested some points for that. My request to you, if you can come out with some suggestion, you can send to me. So I will try that we should approach the government, even RBI also, so that the SME sector can be benefited for the rating. So at the end, I'm thankful to my off the screen people, my own staff, Lokesh, Ayush, Ankit, and Joginder. I think who are not available on the screen. Without their help, I could not do anything, because everything, drafting the agenda, drafting the point, drafting the talking points, everything done by Vishwas sir and other my team who are a research project, they are doing it. I think today webinar is on our YouTube also. So for recording, we will try to send to you. Everybody will send a recording of this webinar. Please help us for developing the SME sector. We will try to approach you again on this subject. If some any clarification is required by my entrepreneur or by the members, or even the banker be asking something from us. And I am thankful to you. No word to express my gratitude on behalf of myself and on behalf of the researcher in India. Thank you very much, sir. Thank you. Thank you, everyone.
Thank you, everyone.
Thank you, Mr. Gupta.